Welcome back to the Teaching Tax Flow podcast, everybody. Today, episode 108. You've been waiting for it. You've been asking for it. We've been collecting the series of questions for you. We are going to deliver some rapid fire questions to my co-host here shortly. But before we do that, as always, let's take a brief moment and thank our episode sponsor.
This podcast is brought to you by Legacy Lock. If you are new to estate planning or simply need to review your current plan, Legacy Lock makes it as easy as pie. Legacy Lock is a unique platform that enables you to easily complete your attorney-drafted documents conveniently from the comfort of your home or office. Your first step to this peace of mind is simply visiting teachingtaxflow.com/legacy.
All right, everybody, here we are back again on the podcast. And I just realized, too, sometimes, actually most of the time, I don't even introduce myself. So my name is John Smith. Just kidding. John Tripolsky. I should say John Smith because by the end of this, I know my co-host here, Chris Picciurro, is absolutely going to be mad at me. So, Chris, are you ready for this, man? I got about 20 to 30 really good rapid fire questions that you have no idea what I'm going to ask.
I know. This one, this episode's scaring me, but great to be back. And this one, man, it's hard when you don't know what's coming, but that's all right. And we're just going to, sometimes a candid answer is the best. And you're right. I have no idea. I know you've been collecting information from different people in our Teaching Tax Flow community. Some are client, some we've worked on with tax planning. Some have, or just, at this point, just member of the community, member of our private Facebook group, Defeating Taxes, defeatingtaxes.com. Jump on in and let's see what you got, man. This is a weird one, though, right? We've done over 100 and something episodes. Other than our 100th episode, which we really didn't have a big plan for, this one, I have no idea what you're going to ask me.
And I tried to tell you what some of them were. Maybe about 2 weeks ago or 3 weeks ago when we talked about this, you're like, nope, I don't want to know it. I just want to answer them. And that is a honest situation we're in here, though. So I can't promise anything, but looking through these, they're all actually really good. Some of them I know will answer kind of inadvertently. Answering one, you might answer another one. So I apologize if I kind of ask it twice, two different ways. And most of these I know exactly what they mean. So didn't really categorize these by any stretch, but heck, man, let's just jump into these.
That's all right. And we've had this situation before. We've had some webinars that we've done that are just live, people asking questions. We're actually going to have additional webinars coming up. So yeah, this will be fun. If you need us to expand on the answer, again, reach out, jump in our community, and all right, let's let it rip.
Alrighty. So in the sake of time, we'll just start kicking these things. So first question, what is your social security number, date of birth, and your I'm totally kidding. But it is actually related to this first question. Somebody specifically asked what the role of a CPA or EA is in tax prep and tax planning. Great question.
Well, those are two different tasks that complement each other. First of all, a CPA stands for Certified Public Accountant, and Enrolled Agent, or EA, stands for Enrolled Agent, both of which are licensed tax professionals. And we both work under something called Circular 230, which is what the IRS has put out for what our standards of ethics and care are for clients. Now, what our role is, our role as a tax preparer is to properly report someone's income, deductions, credits, all of those things on a year-end tax form. So on a personal level, that's a Form 1040. And so when you think about tax preparation, think about it as a compliance task and something that's done retroactively. That's our role. The tax return deadlines are what they are, and we can play a role in extending those returns. We can play a role in just making sure the information on the tax return is accurate. Obviously, we're going to attempt to get our client the best result possible. The advantage of working with a CPA or an enrolled agent is that they can represent you in front of the IRS. So that's a huge advantage. They are signing the return based on and attesting that, to the best of your knowledge, this information is correct. Ultimately, the numbers on your tax return are the responsibility of the taxpayer. But as a licensed tax professional, we know that we are required to have continuing education every year, a lot of it, and also ethics training. Now, tax planning and strategy is much more flexible. So tax planning and strategy, the role of your EA or CPA is going to be someone, and I can just speak for myself within creating teaching tax flow. What we're trying to do is legally and ethically reduce the tax you pay in your lifetime. And you want to do that using different strategies. So this is very proactive. And what we're trying to do is we're trying to make the tax return result as favorable as possible looking forward. So an example, there's tons of examples, but an example would be someone that typically we want to get to a prescription. So John, I'll give you an example. Let's say you've got a younger couple and they are looking to buy their first home, and they're questioning, they need $40,000 down payment, and they're questioning, they've done a great job of savings. They have $40,000 in a money market account. They have $40,000 in a brokerage account, and they have $40,000 in a retirement account. How they get that $40,000 out of those accounts have completely different tax treatments for all of them, with the end result being a deposit on their first property. So those are the things that an EA or CPA can do to help their client prepare or plan. If they come to us at the end of the year and they said, oh, we bought a property and we yanked the 40 grand out of X, at that point, there's nothing we can do other than report that activity, be it favorable or unfavorable, on their tax return.
Awesome. Well, great explanations. And I know that one was a little bit longer because the overview of it. It's all good. I mentioned pickleball. I didn't have to cut you off because you didn't mention pickleball, so we're safe. But and these ones, actually, the majority of these ones will probably be a little bit more of a quicker response for you.
Sure.
From your experience, and actually going back to that answer too, moral of that story, your tax professional can only be as good as the information you give them. So don't muck up your numbers too bad. Or, this guy's going to come after you with a pickleball paddle. So the next one, what are some of the most common misconceptions people have about taxes? And I'll kind of let you answer that one in whatever direction you want to. Is there any specific deductions, anything? It's kind of a general question too.
Sure. The biggest misconception is that you have no control over how much tax you pay. All the other misconceptions are a ripple from that. You control your tax by the actions that you take or lack of actions. If you take no actions and are completely reactive, the federal government, aka the IRS or whatever state and city you live in, determine your tax.
Easy enough. This one is a little bit self-serving. We actually answered this one on a Facebook post, but I'm still in the question anyways. If somebody's looking for the best places to stay informed on taxpayer knowledge, where is that? And me, the marketing guy, expects a good answer from you on this one.
Well, here's what I would do. We know that teaching tax flow, we put out content, we have a community, and then we coach clients, and we coach them on tax planning and strategy. If you're just dipping your toes in for absolutely zero investment, number one, jump into our Defeating Taxes private Facebook group. Like I said, defeatingtaxes.com. You can post anonymously in that group any questions that you have. Number two, subscribe to our YouTube channel called Teaching Tax Flow. We have over 200 videos. They are typically 5 to 7 minutes or less. We have several series of videos, channels, right? I don't know if I'm saying that right, but in 1 minute tips. And then just follow Teaching Tax Flow on all your social media. That is going to help guide you in the right direction. If you're working with a tax professional right now that you really like, that's great. Continue to work with that firm or that person, but this will give you the knowledge needed to have even more intelligent conversations with that person.
Good. I'll give you a 9.5 out of 10 on that response. Good job, buddy. So this one, it's funny because this was a Facebook post I think when we did a podcast way back when, this is well over a year ago. I have literally written in here 2023.
Oh, wow.
So we're talking about board of directors. I imagine this was the post that we did a podcast on it specifically, and personal board of directors to be specific. And somebody's response back to that in some way, shape, or form, I forgot if it was on Facebook or LinkedIn or somewhere, but I in quotes, it says, I thought this was only for nonprofits or other organizations or large corporations. So can you explain to us in 30 seconds or less there what a personal board of directors is?
Right. We feel at Teaching Tax Flow, everyone should have a personal board of directors. Yes, publicly traded companies and large nonprofits have a paid board of directors of typically former executives. That's okay. You need to build your own board of directors. Your board of directors is your sounding board. So that should be made up of trusted advisors. So the most common people on your board of directors would be an attorney, an estate planning attorney, a tax professional, a tax planner, a bookkeeper, a financial advisor, an asset manager, a banker, a lender. Now, people could play more than one role in that, but that's typically your personal board of directors, your insurance professional, your life insurance consultant, all the people that you go to make really good financial and tax decisions.
Awesome. What are some of the most common tax deductions that individuals often overlook?
Wow, that's a good one. An individual, I mean, typically if you're working with a tax professional or using some type of higher end tax preparation software, they're going to guide you through a question process where you don't miss stuff. But I will tell you the most common. The most common is going to be a 529 plan contribution at the state level. And why do I say that? A 529 plan contribution, there's no deduction on the federal tax return. There's nowhere even to report this contribution on a federal tax return. But many states give you a deduction if you make a contribution to their state plan on the state return. So you typically miss it because you're thinking this doesn't matter on my federal return.
Awesome. So this one, I won't say a name who they are, but this is somebody that I know personally. I don't know where they asked me.
Come on, cough it up.
It was probably at a coffee shop, let's be honest. And I'm in Michigan, so there you go. They're a Michigan resident.
Ooh.
And I can't say even remotely close who they are because I'm sure they would feel like, oh crap, I don't want people to know this. So their comment was, and then I'll ask this in a question form, was they started a business with really the misconception that a write-off was free or a business expense was free, which we all know is not the case at all. So in talking with them, their question specifically was, well, then why is it better to own a business or be self-employed? Why don't I just go get a full-time job? Mm-hmm. So do you have any advice maybe for somebody who's stuck in limbo as far as it relates to taxes? Obviously, we won't talk about income or motivation between those. Should you leave a full-time W-2 and go off on your own? What's your take?
Well, there's a lot of factors involved. So for there are so many factors as far as bankability. For the other factor is, what are you classified as? Do you have an employment relationship with someone that, and there's a long list. We have a podcast episode on the difference between a subcontractor and an employee. Let's pretend that your income would be the same and all these other factors would be the same. The thing to remember would be this. If your tax laws are written to encourage and discourage certain behavior, one of the 3 laws of Teaching Tax Flow is that tax agencies are your involuntary business partner. What's that mean? That means that you pay tax on your gross W-2 wages. Take out, if you're putting pre-tax into, 401k or whatever, but you pay tax on whatever your W-2 wages are. And if you have expenses to offset that, home office, driving, etc., there's no deduction for it. When you're a business owner, you pay tax on your net income. And there are a lot more deductions that are ordinary and necessary in that circumstance. So there are positives and negatives to each, but ultimately it comes down to someone's situation. And And there have been times where someone's overall tax burden would actually be less if they are self-employed. Now, the final point on this, the main negative being self-employed is that you're paying both sides of the Social Security and Medicare tax, what we call self-employment tax, which is 15.3% of your net income, where when you're an employee, you're paying 7.65%, but on your gross income.
And this one is related to it. And you could just say yes or no, or however short you want to. In your words, how important is it to keep accurate financial records for tax purposes for a business?
It's essential.
You're like,
I mean, there's no other
response.
If you don't have accurate records, then you're taking, let's put it this way, well, lack of records, if you get examined, if you can't substantiate your expenses, you will pay tax on all of your income. You've got to be able to substantiate your expenses.
Excellent. No specific question, but somebody can you describe, I imagine they meant legally pay my children, which we refer to as income shifting to family members. Can you describe that to us very briefly? As brief as possible.
Right. Well, don't worry. We have a 1-minute reel on this. But yeah, so for business owners,
podcast.
We do. So for business, if you own a business and you have children that work in the business, as long as they are doing, they're getting paid a reasonable wage for legitimate work, there's nothing wrong with paying your children through your business. Depending on how your business is structured, there could be payroll tax savings. And ultimately, typically, there's going to be a tax savings between their marginal tax rate and your marginal tax rate. You have to factor in the costs of paying them. But typically, there's going to be quite a bit of savings if that makes sense. But again, they have to be doing legitimate work. I'll give you an example, Jack. We did a special event here locally in Franklin just recently. I needed someone, because the facility we were using was closed. I needed someone to stand outside and, as people came in, go in to make sure they got into the building. I also needed someone to sit with nice handwriting, check people off that RSVP'd, and make sure they have a name badge. My kids did it. My 11-year-old and my 14-year-old did that. They did legitimate work. They were there for 2 hours, and I paid them a reasonable amount that you would pay someone. I can't pay them $1,000 for this. But if I was to go hire someone to do this, I would expect to pay about $20 an hour as this a kind of an administrative person. So that's an example of a legitimate payment to minor children. And minor children have different rules than adult children.
Absolutely. Can you describe exactly what tax credits are and how they relate to tax filing? So filing taxes.
Absolutely. So what a tax credit and tax deduction often get confused over those two. Here's what a tax credit is. A tax credit is a coupon. It's like meaning maybe that's not the best way to describe it. A tax credit is a payment of tax, where a tax deduction just reduces your taxable income. So a tax credit offsets, let's talk about federal income tax. So if you get a $1,200 credit for daycare expenses or for energy efficient home improvements, and your federal tax is $10,000, now your federal tax is $8,800. So a credit is better than a deduction 99% of the time. A credit is actually an offset to tax. Let's say put a caveat in there. There are two types of credits in general. There are refundable and non-refundable. A refundable credit means that if the credit exceeds your federal tax, you actually get that money back, right? A non-refundable credit is kind of like a store credit. If you have a $10,000 credit, but your tax is only $9,000, then you only utilize $9,000. The store's not going to give you that extra money. So you got to determine if it's non-refundable or refundable.
Are there any credits that actually carry forward too, like where you can use a percentage of it and then 1 year and then the rest the next year, or most of them kind of a annual?
Most of them are annual. There are some that carry forward. There's a whole form. There are some like foreign tax credit, potential research and development credits. So there are some credits that do carry forward that are more aligned with a certain segment or type of income, and those are reported on your tax return.
Yeah, that was my own question. Hey, I got to throw one in there. Look at that.
Yeah.
Somebody asked the question in a group that we're all a part of. This could be for individuals and for businesses as well. So basically saying that they filed previous year's returns. I don't know the whole situation. Says, what do they do if they can't afford to pay their tax bill in full when due? So maybe actually, if I can add another piece to this one too, Chris, if you can answer that, but then also, again, my own question I'm going to throw in there. Explain to us a little bit about estimated quarterly tax payments.
Mm-hmm. So if you cannot pay your tax bill, the first thing, just get the tax return filed, because there's an additional penalty for filing late. If you can't pay your tax bill, at this point, the IRS is pretty friendly about setting up alternative payment arrangement. The most common is going to be an installment agreement. So you can request, I believe, if you owe under $50,000, I have to double check that. You could request an installment agreement with the IRS right on their website, irs.gov, and they would approve it most likely and just have you pay monthly. Now, you will still incur some penalties and interest, but at least you don't get that doesn't go on your credit report, and you can get into their good graces as far as paying on a monthly basis. If you can't pay your bill, and I think that, so let's say you file a return. First thing is file the return. Then you get the bill saying, hey, you have unpaid taxes. And then that's when the IRS says you've got options. So you could either pay the whole amount in 90 days, or you can set up an installment agreement. There are rare situations where if you can't pay what you owe, and you basically have no way to pay that balance, you could try to do a offer in compromise. Those are very, very rare, and you would definitely need to bring in an expert. We've had Andrew Poulos has been on this podcast multiple times. He helps clients do offer in compromises. But answer the question, just file the return. For the 95% of people that owe the IRS, they can figure out a way to pay them just using an online installment agreement request and go on. It's rare someone owes over $50,000. Estimated quarterly tax payments. So when you're a W-2 person, tax is withheld from your payroll. If you're self-employed or if you have other types of income, you might have to make quarterly estimated tax payments to the IRS. So in general, each year you have to have at least 90% of your current year tax liability or 100% of your previous year tax liability to avoid any penalties or interest. So for people that, again, have a lot of income that it doesn't have withholding on it, you would pay quarterly estimated tax payments. I'm going to put a bow on this topic by saying this. If you owe back tax, let's say you filed your 23 and you couldn't afford to pay it, and you probably should make a quarterly estimate for 24 tax year. My recommendation is put those assets towards paying 23 off, so you don't have that bill lingering over your head before you start making quarterly payments for the next year.
Good advice. And I'm trying to whittle this down to 2 more questions. I got about 12 more on here, but we could save them for round 2 of this.
Maybe you got some more rapid fire ones. I could.
Yeah. We'll fire off some of these things here. So one of them we already talked about a lot about tax planning. What's some advice you can give somebody if they're looking to hire a new, and then I'll add in, or not for the first time, but hire a newer replacement tax professional or bookkeeper? Like, what's some advice you can give them as far as for, qualifying questions or interview questions per se?
Well, I'm going to say this might sound a little crass, but realize that any good bookkeeper or tax professional is interviewing you way more than you're interviewing them. Okay? And no one's going to tell you that. Why? Because there are way more people that need tax professionals and bookkeepers than there are bookkeepers and tax professionals. What you want to make sure is that they're just a good fit. My best advice is, although you might be price conscious, don't lead with pricing. If you could avoid asking about pricing at all in the first meeting, I would do that for sure. You're going to, why? Because the bookkeeper or tax professional, you want that person to be transparent with their pricing and be the one that brings it up. Do you go to the doctor and say, hey doc, I've got this, how much would it be cost to fix this, no. You go there and they might say, look, we've got this treatment plan for you, or dentist is a good way. Here are the costs associated with it. And so that's my best advice. Make sure that if you're in a good relationship with one of these professionals, make sure that you can keep it and be an easy person to deal with. Be attentive. If you want them to reply to your emails within one day, which I think should happen, then you should do the same thing. Be forward with coming up with documents, and just look for that person that is the right fit. One more piece of advice, a little like a dirty secret: don't bash your previous accountants and bookkeepers. That's a red flag to me. There's a reason you're looking. There's a tactful way to say it. The only other thing too is I would, if I was looking for someone, I would make sure that they might be a one-stop shop, which is great if that's the case. But make sure that there's some type of contingency plan. If for some reason that person retired or won the lotto, and that way that because if you're working with maybe someone that's a sole practitioner and they do everything from clean the floors to file the returns, and let's say they have a stroke and they're not available for 4 months and hospitalized, how can you even get your documents? So you want to make sure that that they have, most of them have a friend or someone, another person that can pick up that slack, or a business partner.
And final question. So I've been holding on to this one, and this is a really good question, and it probably yields a little bit of a lengthier response. So I'll give you a little grace if you go a couple of minutes on this one. Somebody asked a question a while back, again, kind of just this snowball effect with this list is, looking at an entire year. So looking at a calendar year, what is the best kind of schedule, if you will, for somebody to, quote unquote, I think they put it as take care of their taxes. So we'll give the air quotes if we can, because it is a serious question. But really, how does that look like? I mean, obviously there's tax deadlines throughout, but maybe you can kind of bring a little bit of tax planning advice into this response, as well as maybe some things you can do after the year ends. I know that we've talked about. So kind of walk us through maybe a calendar year schedule and beyond if we can.
So as far as when you say take care of your taxes, let's focus on tax preparation. My answer is going to be very short. The best time of year to have your tax return completed is not a deadline or it's any time before October 15th that legally and ethically gets you the absolute best result possible. It doesn't have to be before April 15th. It could be, and you might have a very straightforward situation, and it could be February 11th. It could be September 11th. It could be whenever. That means that you have your books and records complete, that your tax professional you work with has the capacity to give you undivided attention, and that changes all, for each person. So focus on the best result legally and ethically possible, whatever that is, and not a certain date.
Makes sense.
So
makes sense.
I want you to think when you're talking about having tax preparation, I want, if you're listening to this, to think about your favorite restaurant. And I want you to think about the different experience you get going to that restaurant at 6 p.m. with a party of 8 versus for lunch on a Tuesday with the party of 2. Same food, same menu, same price. Which one's a better experience? Probably
a lot less stressed service, I'd imagine. So, Great answer. Ran a lot shorter than I thought you'd give us. So, and we appreciate
tax planning taxes should be a verb and not a noun. Tax planning should be occurring. Either set it at a certain month of the year that you want to take a look at things, and then if you have a CLE, like big life event, And those are the trigger points typically.
Awesome. Well, we didn't stump you, sir. I knew you'd know all the answers. And darn it, you actually answered all my questions. So kudos to you for behaving yourself. And there's a couple on here, I'll save randomly. And honestly, if anybody's listening to this and you have any of these questions, I'll probably make another Facebook poll or something on this in our Defeating Taxes group. Maybe every time we get to a dozen questions, maybe once a quarter, we do one of these. Because they're fun and they're great questions. And to me, it's very interesting because a lot of them are asked. It's the same question, just in different contexts. So it's, trying to compile these, we might look at and say we have 150 questions, but there's really only 6 or something.
Right.
So this was fun. I enjoy it. So thank you for entertaining my idea of trying to stump you a little bit.
My pleasure. And thanks for listening. I look forward to seeing everyone's questions in the future as well.
Absolutely. And if you guys are listening to this and not watching it, wherever you are listening to it, check it out on YouTube. So we're posting all these episodes in their entirety. We're not editing anything out. You can see it. So you can kind of, laugh at Chris's facial expressions when I try to, ask him about a 1099 employee or LLCs and all this fun stuff. Early podcast, hint, if you really want to get a good laugh. But thank you everybody again for joining us here on the Teaching Tax Flow podcast. We've got some great topics coming up, looking at our schedule here for the next 4 to 6 weeks. A couple curveballs in there you probably wouldn't expect to be on a tax related show or finance or business related show. So we look forward to having those guests on those topics. And as always, we'll see you back here next week, roughly the same time, totally different topic here on the TTF, the Teaching Tax Flow podcast. Thank you, everybody. See you soon.
The content provided is for educational purposes only. We encourage you to seek personalized investment advice from your financial professional. For all tax and legal advice, please consult your CPA or attorney. Investment advisory services are offered through Cabin Advisors, a registered investment advisor. Securities are offered through Cabin Securities, a registered broker-dealer. The content of this podcast does not constitute an offer of securities. Offerings can only be made through an offering memorandum, and you should carefully examine the risk factors and other information contained in the memorandum.